You have Hang Seng on your screen, which is actually suffering the biggest cut right now. It's almost 1% lower, 200 points gone on the Hong Kong market.
Inflation was only a tenth above expectations in January. Core was in line.
It's positive that we continue to see inflation move lower. I think you can't deny that everything's moving in the right direction.
That's the first take on the index. It's lackluster, you'd have to say. The Nifty is down about 40 points.
The broad results are in line with market, but that's only because of superlative performance from banking and financial services.
It's very important that we get volumes, and critical volumes are very important to scale the business.
I think what we are dealing with is a situation where inflation is turning out to be quite sticky.
We're flat right now, but we're off about 65 points from the day's low.
A majority of the lenders have selected NARCL, or the National Asset Reconstruction Company, as the winning bidder.
Monetizing a valuable asset like Sinji is a very important way of creating value for building another business.
These orders are the largest ever placed by any carrier in the world of commercial aviation.
We are off around 70 points from the lows.
Well, that was the day so far. A quick recap of what has happened till now, but this is the last hour of trade. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. Another edition of Closing Bell over the next 1 hour. I'm Prashant, with me my colleagues Rima and Surbi here in the studio, and Nigel, of course, as always, with us from the newsroom floor. Guys, hi. Good afternoon. Treading water, directionless, and not really running away in either direction. I think that's perhaps the best way to put things. But, you know, off the lows, that's, I think, the other thing to say about the market. The early morning lows were just that, early morning. And then after that, the markets sort of come up sharply and did not look back after that. Today's high and yesterday's high are pretty similar, 17,960, not quite 60. Today's high is higher than yesterday's. But as we were saying yesterday as well, 17,960 is basically the upper end of that rising channel, which starts from the 3rd of February. It's a near-term right, but it's a rising channel, and the upper end falls at 17,960, and a close above it, just 20 points. I mean, could happen. I think would be good. A solid close above it, perhaps opens up more. Banks are doing a little worse off as compared to the Nifty, and private banks perhaps is the pocket to blame there. Otherwise, I mean, IT and autos are sectors where you're finding gainers. And apart from private banks, FMCG and pharma are two areas where there is some loss. Overall market breadth is again negative, and I think this is becoming a bit of a not trend, but for 3 or 4 days now, even whatever the Nifty has done, the broader market breadth has been negative, and substantially so. And I think that is something to pay attention to as well. Although I think it's come up. This is the NSE advanced decline, almost 1:1 now. It was wider earlier on in the morning. Guys, hi.
Hi.
Good afternoon.
Good afternoon. The bulls would have wanted a follow-on rally, right? Yesterday was a good session, at least for the benchmark indices. They would have hoped for another strong session, which would have helped us break out of that range. But that's not happened. We've managed to recover from the day's low, but we're still very much on the flat line, which means the resistance levels of the 100-day moving average and the budget session high of 17,972 still very much hold. We are hitting the upper end of the trading band, but not yet quite conquered it. Asian markets were fairly weak. So markets like Korean markets, Hang Seng, Taiwanese markets were down 1.5%. In contrast, the European markets are holding up, so it's firm for the CAC and the DAX. The FTSE is pretty much on the flat line. Some of the gainers today include Reliance Industries gaining for the second day in a row. Apollo Hospitals, big recovery post the conversation with CNBC-TV18. So Apollo Hospitals is now one of the top gainers. Eicher Motors again recovering from the losses yesterday, and in the IT pack, it's Tech Mahindra leading from the front. On the losing side, you've got FMCG dragging its feet. ITC HUL, HDFC Limited is subdued. That's the heavyweight dragging the markets down, and ONGC post numbers.
Well, let's just pull up that Nifty chart once again, because if you leave out the first, half an hour of volatility, 10 a.m. onwards, this chart has been hovering in a 50-point range. That's as narrow as it has been today, really. Now, on the flip side, pull up the Bank Nifty chart, and that's where there seems to be a problem, from the bulls' perspective, because banks are beginning to be a bit of a drag, and the Bank Nifty has been far weaker than the Nifty for, most parts of the session. It's at pretty much the lows of the day right now, and that's evident in a lot of the larger stocks, whether you're looking at an SBI, ICICI, HDFC Bank. or even some of the others, the tier 2 names. Basically, bank stocks quite weak. It's all about individual stock action, Nigel, really. I mean, that's where the big headlines are in the mid-cap arena.
Well, that's right. Earlier this morning, we made this point that the Nifty, it seems it has some unfinished business at higher levels. And that's why from the lows of the day, well, data suggested that we could see a buy on dip. And that's precisely the way it's played out today. So the Nifty has done well. The Nifty Bank has not done much today. But the IT index, it's moving in tandem with the NASDAQ. So for the second day running, the IT index is doing an outperformance. And remember, the NASDAQ as well did do pretty well in the last couple of sessions. So you may want to say that it's not directly comparable or whatever that is. But otherwise, in fact, they're definitely moving in tandem on a day-to-day basis. So just keep that in mind. Looking at the options data, 17,800 put is seeing writing, 17,900 put as well as seeing writing. And, the options data suggests that maybe expiry could be, could protect around that 17,800, 17,850 odd mark. Remember, we have weekly expiry that plays out today. However, at higher levels, the 100 DMA is a bit of a resistance. The 18,000 call as well is seeing a fair bit of writing. So that becomes a bit of a resistance zone. If you get past that 18,000 odd mark, then things could look up. Just want to point out two stocks. One is Interglobe Aviation. Just take a look at what's happened in the last 60 minutes or so. That's moved to the low point of the day. So clearly the street is sensing something on that particular counter. So keep an eye out on that one. Volume is very, very large. Interglobe Aviation as well. Big open interest build up. So that one should be on your radar. And Max Financial, that's the other one. Just take a look at the intraday chart. That as well has moved to the high point of the day. So let's see whether or not there is any news flow. But otherwise, both these two stocks, well, they're moving in different directions and particularly big moves in the last 30 minutes. Just pointing that one out.
Okay, good spot there, Nigel. Thank you very much for that. Let's tell our viewers what we've lined up on Closing Bell today. So from the auto space, Eicher Motors and Bharat Forge are in focus as both stocks see big moves. Eicher Motors recovers, is up 4%. On the flip side, Bharat Forge is down 4.5%. A check on what brokerages are saying.
Apollo Hospitals is the top Nifty gainer today, despite posting a weak set of third quarter results. We'll get you the fine print and exactly what it was in that management commentary, Ms. Reddy speaking to us earlier, which has caught the market's attention.
We'll put the spotlight on EKI Energy. The stock has been under pressure, down 80% from its all-time high levels. What's really happening? A quick analysis.
And of course, later on the show, we'll talk stocks and top portfolio bets with our alpha manager of the day, Aditya Sood of Incred PMS. All this and more coming up in the next 60 minutes.
Okay, almost at the high point of the day, 17,951, 52 or so is where we are at. How should you position yourself in the last hour? Mitesh is with us for that perspective. Mitesh, hi. What's your sense, Mitesh? I was pointing out that 17,960, that rising channel, perhaps a close above it would be good. Would you bet on it? And what kind of trades would you want to take here?
Prashant, we've been calling that this market does look like showing signs of, eventually heading upwards. It's done that, but that decisive breakout, which one happens with momentum and force, I think that's the missing part. If it happens in the last 1 hour, I'll be very happy to take it because we have more of long bias positions. But it's not only 79.2, which is the 100-day average, plus there's also an intraday pivot which was made on the budget day, 79.80 zone. So I think let 18,000, which is a round number as well, let that be cleared. And I think then you can take a 55-60 point kind of a stop loss and trade with long buys. 18,150 should be the first target then, and 18,250 eventually should be the next target. So in the short term, the indicator setup is also slightly on the positive side. So I'm hoping that, we'll have a breakout towards the end of the day. And on the stock side, I have one buy and one sell. Siemens is something, which has shown continuation today. So that's a buy with a stop at 31.90 for targets of 33.20. And Sun Pharma is, in fact, breaking down, showing some negative traction. So that's a sell with a stop at just about days high of 1,006.5, 1,007. Look for targets for around 970.
All right.
Okay. All right. All right, Mitesh, thank you very much for that. Let's focus now on some auto names on the show. Eicher Motors has been positively reacting to its Q3 numbers. On the other hand, Bharat Forge is slipping in trade. What are brokerages making of these numbers? Sonia joins in for more. Sonia.
Well, thanks a lot for that. On Eicher Motors, you know, the view is very optimistic. So let me start with Jefferies, where they say they have a buy with a target price of 4250, which is well above the current market price. They say that the EBITDA in this quarter rose to an all-time high, and Eicher Motors is on track to deliver its highest ever Royal Enfield volumes as well as EPS in the fiscal, that's in FY23. There are multiple tailwinds for Royal Enfield as well. There is a two-wheeler demand recovery, there's higher premiumization, there's also limited competition and low electric vehicle risk for Eicher Motors. Nomura has upgraded the stock, but they've cut their target price. They also mentioned that, you know, the going is good, but one thing that a lot of brokerages talk about is the increasing competition. Remember, in this year, in 2023, there are two new entrants. There's the Bajaj Triumph that enters India. There's also Hero Harley, which is a big risk for Eicher Motors premium segment in Royal Enfield. Morgan Stanley has a target price of 35.53. They say that yes, the company has gained a lot of market share because of the good response to the new Hunter 350cc, but competition is one challenge and important to see how that plays out for Eicher. And Citi has a buy with a target price of 4400, better than expected margins for both Royal Enfield and the Volvo Eicher commercial vehicle business. Apart from that, Bharat Forge is under pressure because brokerages are a bit cautious post the earnings, and the big problem really for Bharat Forge is the losses in the overseas subsidiaries, which has gone up quarter on quarter. Nomura has downgraded the stock to a neutral. They have a target price of 992. They say there is a cyclical slowdown in the traditional businesses that is likely, that could be offset by a pickup in the growing verticals like defense as well as non-autos. The stock is also trading at about 14 times FY25 EV to EBITDA, which Nomura believes is fair value. Citi has a sell with a target price of 690. Although the management believes that there are multiple tailwinds for revenues in FY24, the overseas subsidiaries losses is something that continues to be an overhang on the stock. Back to you.
Okay, all right. Thanks a lot for that, Sonia. Well, Prakash Diwan is with us. Prakash, what do you make of the Royal Enfield? You know, the stock is flying away as we speak. Yesterday, the bit of a worry was that the Hunter sales are good. The problem is that only adds volumes where it dilutes margins, but seems the street likes that today. And Bharat Forge, as Sonia mentioned, well, disappointing set of numbers out there. The stock has taken a hard knock. Your view on both these two stocks?
So, yeah, good afternoon, Nigel. So let me take Bharat Forge first. I think the concerns that have been voiced around the overseas businesses is definitely, those are very genuine, given the fact that there's a lot of investment that's gone into some of these businesses over the last many years. And anything that, any kind of a slowdown like this ends up giving you very, very dilutive, very poor metrics. You know, the ROC certainly looks so pathetic. So Bharat Forge, which always is from an industry or a sector which is otherwise fairly cyclical, but always had premium being accorded to it given its market share and its leadership strength, needs to justify that to continue with those PE multiple, right? But what's good about Bharat Forge is that entire focus on repositioning themselves and then branding themselves under the Kalyani banner for defense is superlative. I think if you ask me, after 5 years, we'll be talking about Bharat Forge as a pure play defense name and you know, probably being the poster boy of sorts for the Atmanirbhar defense drive that we are seeing underway right now. So there's going to be a lot of positives coming out of that. But then, you know, it may not be timed perfectly where the slowdown in the overseas business is getting compensated with the uptick in the defense or the railways or the non-passenger business, as some of the reports talked about. So there could be those mismatches, but those are opportunities to buy in, Nigel. So that's my view. I would look at it from a longer term perspective and only focus on defense, and eventually the management will also start gearing up towards allocating more capital towards that. So that's one. On Eicher, I think it's too early to uncork the bubbly, you know, just because, you know, Hunter's sales have been doing well, and it was bound to do well because it was a niche that was vacant, you know, affordable price point, but gives you that, you know, huge power kind of a trip of 350cc kind of feel, you know, so all of that was very nice in terms of positioning, but it's going to be difficult for, you know, when you talk about demand contraction, demand contraction has a little bit of this effect that it percolates to different segments at different points in time. So when you're seeing rural demand contracting, there will be some sort of a discretionary urban demand also, which will get impacted, is my guess. So you will have a little bit of that slowdown. and price elasticity is a big thing in India on these kind of things, right? So it's not going to be easy for them to ramp up sales. But I think the margin improvement is coming from the Volvo side, if you really understand, because we've seen Tata Motors, Ashok Leyland, all of them talk about very decent upticks in their CV businesses. And that's the piece that's probably aiding them. But too soon to talk about 4,000 plus kind of levels.
Okay, so you're not holding your breath just yet, I guess, on this one. Prakash, got it. Let's pull up Tech Mahindra, by the way. Nigel was making that point about the big IT rally, and I mean, Tech Mahindra is really displaying that. Stock is at the day's high, 6%. It has now taken over as the Nifty winner, toppled Apollo Hospitals in the tally as we speak. And that's a huge move on Tech Mahindra. Other IT stocks are also doing quite okay today, but Tech Mahindra is the big one. Pull up Infosys, TCS, or Wipro for that matter. You'll see some green, a little bit of green here and there. But TechM is really the breathtaking mover, so to speak. Prakash, your thoughts on this? I mean, and absolutely right. As Nigel pointed out, the Nifty IT, I was just checking, is up 8% for the year. Nifty's gone nowhere. It's actually down about 1% for the year. So would you bet on frontline IT, mid-cap IT? How would you play it for the next at least couple of months?
Good afternoon, Surbi. So, look at today's market. You have advanced declines, which are even, Steven, just about that 1,000 mark. At times it's less than 1,000, more than 1,000, but it's just out there, balanced out. You look at the Nifty movement, you rightly pointed at the start of the show, it's in a band of just 50 points. I mean, you can't get narrower than this. So what's happening is none of these sectors have been able to move the needle too much for the Nifty to really make a difference. I mean, today you have Reliance, which is 2% up, but the Nifty is still flat. So, these are days that manifest or that represent the nature of the market, the mood of the market. The mood of the market is of indecisiveness. You really don't have much of triggers beyond the earnings season. You've got the budget, the US Fed, everything, behind you. And now the markets will be looking at something positive in terms of growth. And that could only come if you start seeing numbers for, this quarter, the current quarter end up well. So there's a lot that's spinning on this quarter, not disappointing as much as Q3 has done. But from an IT sector perspective, I think it's too early. The new contracts that you will probably start seeing getting commissioned Rima is sitting with you. She knows that it's not going to be easy for discretionary spends to come back. And then when you look at Info Edge and hear some of the commentaries that's coming in, it's still, the winter is still on, for this IT sector. It's going to be a while before that revives. So I wouldn't be in a hurry, but Tech Mahindra has its own, headwinds. And that's primarily the 5G rollout. The aggressive 5G rollout that you're seeing is actually going to help them tremendously in terms of scaling up revenue and a very decent margin profile as well. So that's where they're coming from.
Okay, that could be an additional trigger. Got that, Prakash. Stay on. We have to take a break, Prashant. I was just thinking when, Prakash made that point, all the big triggers are done, budget is done, policy is done, Fed has done what it has. People are saying rates have peaked off. All of that is done and the market hasn't taken off. Remember, we were saying after budget, everything gets out of the way, then the market takes off because we've been kind of sitting quiet since the start. But that's an interesting point in itself.
You missed one factor which no one anticipated, the Hindenburg Adani.
So
that was absolutely, that came out of the blue, right?
Yeah,
and I think if you remember the day of the budget, more than the budget, it was basically, that was the story which was playing out, right?
Market,
Absolutely. By the way, I was thinking you were going to comment on the winter summer, which Prakash alluded to. I stepped out for a bit. I mean, it's hot and I'm dreading the summer, so...
Memories of winter in Bombay, it's gone.
So on Monday, Mumbai's temperature was 37.3 degrees.
Oh dear.
We're still in February. That was the peak on Monday, 37.3
but Prakash
degrees.
is talking about the proverbial
funding winter,
the
startup funding winter.
Right.
Okay, let's get into a break on that note. On the other side, we'll be joined by our alpha manager, Aditya Sood of Incred PMS on the other side. Welcome back. After being comatose for a greater part of the day, there is now some movement in the markets and it's inching up. It's pushing higher now, ticking higher by the minute. There you have it, 17,970 on the Nifty. It's a 41-point gain, but all those 40 points have come in just in the last 20 minutes of trade. Pull up some of these auto names. Tata Motors is now up 1%, M&M, Bajaj Auto. You've also got Hero MotoCorp. So it's suddenly the auto stocks which are now trying to help push up the markets. There you have some of those intraday names. 17,974. Now the budget day high has also been conquered. The budget day high was 17,972. We've managed to go past it. So these were some of the resistance levels that the street was watching. Levels between 17,950 to 17,970. We're trying to push above those levels. Let's see whether that 18,000 mark can be conquered. Apollo Hospitals is one of the big movers today, and that's gaining despite a weak set of Q3 numbers. Ekta is here with the fine print and what excited the street from the management commentary. Ekta.
Thanks for that. Well, yes, overall it was a disappointing set of numbers in terms of the operations for Apollo Hospitals. Revenue was up 17%. Margins came in at 11.9%. Street was anticipating around 12.5%. And the profit came in lower on a year-on-year basis as well as on a Q-on-Q basis. Now, in terms of the digital health and the pharmacy segment, which is basically Apollo Health Co., the Q3 GMV was up 85% Q-on-Q. They are on track to deliver 1,600 crores in terms of GMV, but the EBIT loss expanded all the way to around 74 crores this quarter versus 54 crores in the previous quarter. The diagnostics and the retail health EBIT also was a loss this quarter of around 2.5 crores. Now, despite these performances in these particular verticals on the operating front, what has really enthused the street is the commentary from the management, where Sunita Reddy has indicated that they have reached a peak burn or losses when it comes to the digital business, and critical volumes are important to scale the business. They have a requirement of around 200 crores in the first half of FY24 for the digital business, but after that they are also alongside speaking to non-strategic long-term investors for the digital business. So the fact that maybe the losses have peaked at this point is something which has enthused the street. They are on track for the GMV targets that they have put out. The core healthcare business continues to perform well, so that is definitely a positive. On margins, they said that they expect a huge ramp up in margins in FY24. Let's listen to Sunita Reddy, in fact, talking to us earlier in the day.
We've reached a phase of peak losses, and in the process, in the first 3 years of digital, it's very important that we get volumes, and critical volumes are very important to scale the business. We have currently 25 million users, and we're doing over 45,000 transactions on the online business. And I think all of this comes at a cost. There will be a requirement of 200 crores for the first half of next year. And this is something that the parent company can definitely fund. We do have for the long term, we are talking to investors. They are not strategic in nature, but investors who are there for the long term. And I think that all of us know that the environment at this time is not the appropriate environment for capital raise, but we are working on a capital raise.
Okay, so that was the Apollo Hospital management, and that commentary really fired up the stock. Prakash, what do you think? I mean, not just this quarter, but also your thoughts on what Ms. Reddy said. And so, as a more medium-term question, the stock is, of course, a long way off from the COVID highs. I'm not sure if it's getting back there or not. But just your perspective on Apollo for someone who's looking at this from a medium-term perspective.
So, Survi, we need to understand that given the huge capex that they have been incurring in the last many years, this ramp up always comes at a price, and that is, the fixed price, the fixed cost that you incur gets so high that if you don't have utilization levels which are decent, or all other verticals of the business that start contributing, it's going to be extremely difficult for these businesses to be profitable on a quarter-on-quarter basis. There could be lumpiness in the revenue stream, and that's what investors will have to live with. And that's exactly what her explanation ties in with. What she's talking about is there still could be some burn, but they have earmarked some funds for that. And once that critical mass is achieved, they'll probably start getting profitable in the digital side as well. But competitive intensity, utilization levels, these are lots of parameters that could go wrong. So it's not going to be a linear growth from here on, and you'll probably see those 55, 5400, which it used to be. There could be some time before that happens. But it's a great sector. It's a great business. Look at other players as well if you want to evaluate. Some of them are probably better poised in terms of their return ratios. But it'll take some time. That's my only call. I wouldn't get so enthused or carried away just because of this commentary at this point.
Prakash, stay with us. We're going to talk about a company which really was at one point zooming up, right? I mean, zooming up straight for the skies. I'm talking about EKI Energy, and it's zoomed and zoomed and zoomed, and now it's going the other way. It's down 50% in the last 3 days, and it's down about 80% from its all-time high. I mean, it listed, I think, in April of 2021. Price was at around, I think, 40 rupees or so, went up to 3,300. And of course, now it is where it is. Vivek is here to tell us what's gone wrong here. Today also, it's down at a limit down. So let's put the spotlight and understand what's happening. Vivek, over to you.
Well, that's right. So EKI, energy services, as you rightly mentioned, seen very volatile price movements. So what is it that the company does? The company provides climate change, carbon credit and sustainability solutions as per the website. However, what has been in focus has been, the qualified report that has been given by the auditor. And, they've raised a few red flags, which is what, the street is not liking at this point of time. We've digged into it and, some of the key takeaways as to what exactly the auditor is saying is that, number one, there have been discrepancies in the company's revenue recognition policy. This is as per the auditor. Also, they're saying that the revenue recognition in contracts is not consistent with the Ind AS 115 standard. And also what they're saying is that the company has not fulfilled its obligation of delivering carbon credits under the arrangements or under the contracts that has been done. The management, in fact, has come out with a detailed response and a clarification. And, this is what they have to say. What is it that they're saying? They're saying that the revenue is recognized considering substance of transactions over mere form. And in fact, what they're saying is that the issuance of the verified carbon units from a project is only administrative activity, and that what they are saying is that the company recognizes this particular revenue once the upfront transaction is already completed. So lastly, what they're saying, the company has duly received standalone transaction price, that is the upfront revenue from the customers for the contracts which it has signed. However, just talking about the price action that this particular stock has seen, October 2021, the price was close to 632 rupees a share. January 2022 was the peak price of close to 3,114, down 77% from that particular price. Remember, the prices that we're talking about are adjusted for the bonus, etc., that the company had issued to its shareholders.
Vivek, thank you very much for that. So that's a comprehensive take on what's happened. But Prakash, I mean, you're someone who's looked at this company over the last couple of years. I mean, what do you make of it?
I have also been quite dumbstruck to see the way it moved without, a very veritable business model to back it up. And this is a classic, example of a low float business that kind of gets ramped up on the price, given certain interest and volumes and all. And that's what happens when the bubble is pricked. So it's nothing very unusual, to be honest. But the business itself is such that it's not something that can get awarded or rewarded such multiples so soon. It would still need long years to establish itself, to build that kind of a goodwill around the credits. So it was definitely something which was a mismatch, and probably the price action is now telling you that things are going to be evened out or put to rest in terms of that mismatch.
All right, Prakash, final question from my end before we let you go. By the way, the markets are almost at around 18,000 odds, so it's been a very, very good last 30 minutes for the market. Just take a look at the intraday chart. We're at the high point of the day, and the broader markets as well gaining traction. Prakash, final word from you on NMDC. Yesterday the street was sniffing a weak set of numbers. The numbers were in line, but we are bracing for a far better Q4. Your take on the stock?
No, I fully agree. I'm in the bullish camp. March end, you'll probably see ore prices which are fairly gratifying, and that's exactly what's happening in some of the other ores as well. Look at GMTC, look at NMDC now. It's bound to have a reset. It was it was high time it played catch up in terms of the mismatch again on what iron ore prices globally have been and what we are looking at realization for NMDC to improve on. So there is this mismatch, Nigel, that will get itself set right, and March end numbers could look extremely positive from where we saw the December end numbers to be. So that's exactly where probably the street is sensing that, and that exuberance of the price today is just beginning. I think you'll see a lot of build up as we go along.
All right, Prakash, thanks very much. Appreciate you joining in, and it's always good having you with us here on the program. Our Alpha Manager of the Day is also with us now. Aditya Sood is Portfolio Manager at Incred PMS. Aditya, it's always a pleasure having you here on CNBC-TV18. Thank you for your time. I just, to begin with, I just wanted to get a sense from you in terms of how earnings for your portfolio companies, and I have a list of stocks that you own, how's earnings really been for the third quarter? Because overall, there have been kind of more disappointments as compared to positive surprises. But for your portfolio, how have things been?
So I think so broadly in terms of sectoral performance, we have seen, earnings upgrade in financials, particularly on the lending side. We have seen modest set of earnings from IT, ITES companies. Basically, I think so there was a very wide expectation that, this being a quarter of furloughs, and there was also expectation of some bit of slowdown. Obviously, we have not seen that panning out. We had moved to a overweight stance on IT, in the last quarter, and that is a massive overweight stance because, we see it as a once in a 10-year sort of opportunity wherein the best time to buy ITES is possibly this year because, last year we saw a decline of the index. It was the worst performing index in the last calendar. The index itself was down 22%. But coming back on earnings, I think so what has, clearly stood out is a combination of various factors. There are divergent trends within the sectors. And that is what I've been consistently pointing out. So for example, if you look at a company like Newland Labs, which we own in the portfolio, versus its performance vis-a-vis the sectoral leader, which happens to be DVs. Clearly, the performance has been very, very different. If you look at Phenolics Cables, it has been consistently gaining market share. And that is the reason why these companies seems to be, sort of doing well. So our view is that, it is going to be an excellent environment for bottom-up stock picking. Now we can clearly see margin pressure getting abated. There was a considerable element of one-offs in the year gone by, in the sense that we had a lot of B2B businesses which have never reported a loss in last 10-15 years reporting a loss. These are very, very good balance sheets. I mean to say most of these companies that we own would be zero debt, net cash balance sheets. So what we have seen is that, clearly one can see that, there is going to be a stock pickers market because clearly as far as the index is concerned, there is very limited headroom for the markets to move up from here on.
Aditya, afternoon. One of your big bets is Tejas Networks, and I see it has a 7.5% weightage in your portfolio. Are you satisfied with the performance of Tejas Networks? Because, if I look at the last 5 quarters, in 4 of them, the company has clocked in a loss. They have been hit by supply chain challenges and the issue of getting the required equipment. It fits your criteria. It's got no debt. It's got ample cash on its book. It's got great pedigree. Tata Group now owns it. But the company has been hit and it's going through a challenging time. So are you satisfied with the performance of Tejas Networks and your thoughts on the outlook?
So I think so. This is a trade-off between thinking short-term and long-term. If you look at what Tejas is essentially today, what we find here is that, the total addressable market for a company like Tejas is expanding at a very, very fast pace. One of the reasons possibly why the stock is up today is on account of a news item wherein, possibly Tejas is going to be a preferred vendor for the BSNL contract. Now, this doesn't come to us as a surprise. Obviously, like any other government contract, it takes time for the government to award it. Clearly, in terms of capability or in terms of pedigree, if you look at with Tata Group coming in, what we believe is that, 4G to 5G transition is going to be the most critical bit for a company like Tejas. Secondly, if you look at the number of people in R&D, the headcount has doubled post Tata Group coming in, which is now closer to 850 odd people. So we believe that, this could be a company wherein the total addressable market is expanding at a very, very rapid pace. Secondly, it was obviously marred by, one-off supply chain issues. Thirdly, obviously, the balance sheet here itself is net cash. So our view is that, with the combination of various factors, what we see here happening is that, profits can, possibly, quadruple from the low that they made in 2020. So I would regard, 2021 as a one-off year in terms of 22 as a one-off year in terms of, corporate profitability. And part of our thesis has to do with mean reversion. Obviously, the TAM is going to expand rapidly. So it is about, what the company can deliver. And what we have also seen is that, there has been an intermittent correction. The stock rallied from 400 to, 800 odd levels, and now it corrected to, 530 odd levels. What we are utilizing here in terms of positioning is that we are utilizing this volatile environment to build up weights in the companies that we like.
Okay, so I'll try and squeeze in one last one, Aditya. And I was looking at your holding in BEML, and that's an interesting one as well. Obviously, we know that, there are big players across, whether it's metro services, obviously defense, and a couple of other sectors. What gives you the optimism? Because the stock, despite its large order book, the stock has been in a range over the last 1 year or so. It hasn't seen the old highs of 2000 odd. So where is your optimism coming from?
Sure. So there are various factors. First of all, the biggest factor that is going to drive performance of BEML is going to be the TAM for the Vande Bharat. As we understand it, that Siemens has a JV with BEML for the Vande Bharat Express. I think so. It is a well established attempt of the government that we are going to have 200 Vande Bharat trains. What it would mean is that there is going to be a 37,000 crore opportunity for the L1 contractor here. BEML, possibly their scope of work is going to be 8 to 10,000 crores. Now you look at the defense play that BEML has. Obviously, they have been manufacturers of Tata, so on and so forth. I think so. They have an addressable TAM of 20,000 crores over the next 5 years. Out of that 20,000 crore, 10,000 crore is going to be nomination-based tenders. Obviously, it is also in the strategic divestment list. As far as the government is concerned, our view is that smaller divestments are easier to make as far as the government is concerned, because clearly we are heading into an election year. So our view is that again, TAM expands. More importantly, if you look at the P&L of this company, employee cost, which was as high as 27% of P&L, is now down to 24%. This is a business wherein you don't require average cost of employee of what BEML has, which is in the vicinity, in northwards of 20 lakh rupees per employee. A lot of these employees are up for retirement, in the sense that next 2 years there is a clear-cut glide path of 800 odd employees retiring. So we believe that earnings are going to surprise in a company like BEML, because there are clearly multiple tailwinds. So this is a very simple way of playing Make in India with a lot of option value. That is how we see the stock.
Okay, all right, Aditya, always good hearing your thoughts on specific stocks. Look forward to chatting up with you rather soon. For the time, we will slip into a short break. The markets are at the high point of the day. Nimish is waiting for us on the other side. He'll tell us what's the buzz in D-Street Chatter. We'll also get you our technical calls from our experts. Welcome back. You're tuned in to Closing Bell, and we are coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, we've got a bit of a party that's underway for the bulls. The Nifty holding above that 18,000 odd mark for the first time since January 25th. Nimesh joins us to tell us what's going on in terms of D-Street Chatter. Well, Nimesh, when you got up this morning, you saw the SGX 50 under pressure, but the data point suggested it's providing a good entry opportunity. It's played out well today, but what's the buzz?
So, I guess the move is only the last 15-20 minutes of trade. Otherwise, it's been a day of consolidation, been pretty much, in that narrow range. I guess, two things. One, for the bulls, the Reliance is fighting out, so that's been a big mover in today's trade. In fact, for the last 2 days, that's been the feedback, right? That there is buying interest back in Reliance, and that's helping the bulls. On the other side, Liver is pulling the Nifty down. That's one big index stock where there is concentrated selling. It will be part of my charter as well. So that's playing out as far as overall Nifty is concerned. In terms of flows, the sense is it's not backed by very large buying interest. Yesterday we saw there was a small market close buying as well. The FI number was positive. Yesterday was the first genuine positive number. The previous 2 days was largely mirrored by block deals. So yesterday was, as I said, was a pure FI buy figure after many days, and that was the first initial sign that some bit of FI flow is back. And I guess that was largely driven by large flows into Reliance and some large cap names. Looks like that's been the trend today as well. I guess the only sector which is still under pressure is the financial names. And within that, the private sector banks is where there is a bit of supply coming in from the larger FI. So that's the overall feedback as far as flows are concerned. Technically, 17,800 is out of the way now. So we are having a bit of a momentum rally for the bulls to participate. And the good part is it's backed by some large cap names like Reliance and the IT names which are doing good. So that's positive. But largely it's a day of consolidation with a positive bias. But I guess today is not a day when there is large FI buying, is the feedback from the dealing.
Nimesh, we don't mind them not buying too much, but they should not sell. The way they were going hammer and tongs, we just needed them to take a bit of a backseat and it will help us. And today, clearly, the IT index is doing well and Reliance Industries, both of them playing well. But you were mentioning HUL. What's the buzz out there? That stock is under pressure.
That's right. So, that's my first stock. So, among all the large cap names, this is the only stock which is largely under pressure. And there is, very strong sell flow is what I understand from dealing rooms. So, it looks like some of the larger FIs are looking to book profit or sell a large chunk of HUL. So, that's the reason why that stock is under pressure. The second stock is Embassy REITs. If you look at the chart for the last almost 6 months now, the stock has been largely consolidating in a very narrow range. Now the feedback is a large selling pressure from a leading FI seems to be over. So that is one stock to be focused on. The third stock is Keystone Realtors, which is the newly listed company, Rustomjee Developers. The indication is there's going to be a large block in that particular stock very soon. So that's something to track as far as Keystone Realtors is concerned. And the last one is Max Financial. Big move in that stock in the last 1-2 hours of trade. And for a very long time now, the street is anticipating a large deal in Max Financial very soon, and hence that stock is buzzing in trade today.
Right, thanks very much, Nimesh, for that. So that's good getting a list of names to keep track of based on developments which may be coming. By the way, the market is up 87 points and a clean 40 points is coming just from Reliance Industries. So keep that in mind. RIL, and this we were talking about in the morning, it seems to have broken out. I think there was a call in the morning from either Mitesh or Sudarshan. I don't remember. Mitesh is with us actually. Mitesh, was it you who put out a call on Reliance in the morning?
I did. I think, we've been recommending this stock for the last few days. It's showing bottoming out formations, and we had a call, I think, on the 9th of Feb, and then again today morning, which is 15th of Feb. So I think the stock has finally given that reversal, which is what I was hoping for, and I think the stock could now possibly head towards 2480 to about 2500 range.
2500 range. What about your BTST trade, Mitesh? What do you have on the list?
So I have BTST on Trent. I think that's the stock which I had on my radar. That's breaking out. So 1335 or just below that, a rupee below that could be a good stop here. 1365, 1370 in the short term is the target. And ABFR is also now showing signs of reversal. That's BTST with the stop at about 253.5 for targets of 262.
Okay, Mitesh, thank you very much for that. Tech Mahindra has emerged as the top Nifty gainer. It's up 6%. The big trigger for Tech Mahindra is going to be who the next CEO is going to be. The current CEO steps down in December of 2023, and there is a lot of anticipation who is now going to take charge, take charge of Tech Mahindra. There is an analyst day which is scheduled on 3rd of March. So again, the street is speculating, will we hear of the new CEO announcement? Will it take place on 3rd of March? So Tech Mahindra is up 6%. Another tailwind that Tech Mahindra has versus peers is cheaper valuations. The stock trades at about 15 times forward multiple, cheaper than peers like TCS and Infosys, which which are more than 20 times. So reasonable valuation also adds to that tailwind. But let's talk about NSE India. They've signed a data licensing agreement with CME Group for WTI crude oil and natural gas contracts. Manisha is here with the details.
Well, thank you for that. Well, yes, NSE has signed data licensing agreement with CME, and this is for crude and natural gas. And remember, CME is one of the largest commodity derivative exchange in the world. And when you look at crude and natural gas, these are the highest traded commodities in the global markets as well. And NSE also has applied to SEBI to seek approval to launch the contract. It would be traded in the Indian rupee. The base benchmark contract is from CME, but it would be traded in India in Indian rupees there. Now, the important thing here is that NSE, it launched into commodities, started doing commodities in October 2018, and since then we have seen NSE try to do some stuff in commodities, but even with all those efforts, it hasn't really been able to expand or make any strong market share within the commodity market here. In the meanwhile, MCX almost holds the 100% market share when it comes to natural gas and crude oil in India. So there's a very little dent that you could be looking at in MCX, and most traders, when they start trading in one commodity exchange, do not really go to another one. That is another reason or thing that NSE clearly has been facing here. Also, when you look at the numbers within the energy space, MCX actually hit record highs yesterday itself when it comes to crude oil options trading here at around 88,000 crores here. Also, when you look at that number, whether it's about crude oil futures or natural gas futures and options, we have seen the numbers continue to increase. It was actually in the last quarter itself that we saw all-time highs coming in for futures and options as well, and those numbers pretty much have continued in the months of January, especially in Feb as well, where very strong numbers coming in on your screens on that one.
Okay, got that, Manisha. Thank you very much. And obviously, that sense of nervousness is so palpable on MCX, the stock I'm talking about, which is down 4% as NSE goes ahead and gets into this big agreement with of course, the US exchange. 4% lower on MCX. Mayuresh Joshi, head of equity research at William O'Neill, is joining in. Mayuresh, good afternoon. Actually, let me ask you about this. I'm not asking about crude oil, don't worry, but I'm asking you about exchanges. Any thoughts? MCX, I mean, for obvious reasons, is kind of under pressure today. BSE, I mean, any thoughts on the exchange stocks or even IEX for that matter?
So afternoon, Surbi. I think if you're probably looking at the exchange-related stocks, what happened during the COVID phase in terms of significant turnover that were happening across exchanges, whether you're talking about the equity markets or you're talking about the commodity exchanges as well, the average daily turnover ADT was significantly higher. And even if delivery charges had come down, and the quantum in terms of options trading that was probably happening and still is happening at this point of time created significant volumes. Add to that the annuity revenues that came through with new listings for both the exchanges obviously aided them. Now, with the base that they've got at this point of time and the expectations in terms of turnover actually getting saturated over a longer period of time, and more or less getting compensated by options trading at this juncture, where the charges per se are significantly lower. You've probably got some elements in terms of revenue sustainability on a base and whether that can compound quite significantly. So I think valuations A had picked up, and B, I think in terms of comparative checks, there are probably concerns emanating on this one. For IEX, again, I think the kind of gas contracts that they had probably signed, the expectations in terms of one more play coming in and competition intensifying, like Manisha is also mentioning, NSE getting into some areas where MCX is there. I think there are certain headwinds for these exchange platforms.
Okay, Mayuresh, to stay on, we need to slip into a very short break. Banks have also started participating in the rally. The Nifty Bank is up 125 points. ICICI Bank, look at that stock fire now. It's up nearly 1%. Bank of Baroda has surged in the last 10 minutes. So banks now are participating. It's turning out to be fairly broad-based. Get into a break. We'll come back with the closing rates.
Well, it appears Nifty is going to go home with a century today, so pretty good going. And from the Nifty pack itself, Rima was just mentioning about Tech Mahindra. That's the one that's making a big up move. The street is speculating that could be a new head that could come in as soon as March itself. That's a speculation as of now. But Mayuresh, what's your view on the stock? Valuation-wise, it's at a bit of a discount to its larger peers. How do you view it?
Oh, absolutely. No two ways about it, Nigel. Absolutely reasonable in terms of the valuation front. and 2-3 triggers probably happening for the stock. As Rima mentioned, a new CEO expected to come through. What that name is might act as a huge tailwind for the stock. Apart from that, when you're probably looking at the EBIT margin performance itself, the expectations in terms of improved utilization level, discontinuation of low margin businesses, lower SGS expenses, and probably what you're probably seeing in terms of the wage hikes and attrition being behind it is significantly going to aid the operation efficiency. The second aspect, obviously, I think subcontractor costs, they have come down, expected to be reasonable at this point of time. And the ramp up in terms of the large deals that you're probably talking about might also sustain EBIT margins, and the TCV flows that probably come their way. So yeah, I think above all, moving averages on the O'Neill lens looks good from a momentum perspective.
Okay, all right. A quick conversation today. We'll have you soon again, Mayuresh. Thank you very much for joining us. It's a pleasure speaking with you. Thanks indeed. So, good close for the Nifty. We're just, a couple of minutes away. And the move started at 3 p.m. So, bulk of the gains came after 3 and also coincided with the index basically surging past that 17,960 level. We will end with 60 points on top of it. So 18,033 around is where the Nifty looks like it is going to close. Real estate, IT and auto are 3 pockets which did very well. Banks also picked up towards close, but compared to the Nifty, they were a bit soft in terms of trade. Large caps, outsized contribution, index contribution from Reliance today. Rima.
Well, some more gainers in the frontline pack. Tech Mahindra up nearly 6%. Eicher Motor reverses all of yesterday's losses and adds some more. Apollo Hospitals up 5.5%. Life insurance companies also made a comeback. SBI Life has gained close to about 1.5%. You've got Bajaj Finserv. So insurance per se had a good session. Bharti Airtel perked up towards the end of trade. On the losing side, FMCG names took a bit of a beating. HUL, ITC, Sun Pharma was subdued. ONGC post their numbers, was under pressure. HDFC recovered, saw some buying in the last 30 minutes, but couldn't quite take the stock back above the grain.
Okay, well, that was a couple of the frontliners. On the mid-cap side, I was just looking at the way some of the final result reactions closed out. Bharat Forge, of course, 4.5% on the lower side of the screen, but it was actually more hits than misses. I mean, look at stocks like a Borosil Renew, 5% higher, Siemens 3.5%, PI Industries 3%, even Biocon about 1.5% higher. So not bad, considering that we are winding up the earnings season. You had a lot of these tail enders come in actually and surprise on the positive side. Overall, the mid-cap index is going with bigger winnings than the Nifty as well, 0.6% higher, and an almost 90-point move on the Nifty. So Rima, I guess you were asking for that follow-up. It's not a very big one, but given where we were at about 230, I think this is a close that the bulls will take with both hands.
And we've gotten above that 18,000 handle, right? We've not seen a level above 18,000 since the 25th of January, so we've been waiting for it. But finally, are you getting the sense that we've broken out?
I don't know. I mean, it's just too early, right?
That's a hard one, I guess.
You got just one day of follow through, right? I mean, yesterday was the first time we saw a real move, and today. But I think I'll tell you what. The only reason why I think it could, not the only reason, and it's not necessarily the reason why the market should break out, is because no one expects it to break out. I mean, the mood on the street is pretty dull, right? I mean, nobody has a view directionally in terms of what's going to happen.
No one's even looking out for any more, big event or trigger.
Portfolios are not reflecting the index at 18,000. Portfolios are at 17, if not lower, right? Because stocks, bottom stocks have taken a fair bit of damage. So, in that kind of a environment with apathy, I mean, sometimes you get these squeezes higher. So, and of course, I mean, there is Reliance, which is starting to wake up a little bit. And if that participates, I think 50% of the Nifty gains are just from Reliance today. So, I mean, if that does a little bit more, possible that we go up some more here. We'll wrap up this edition of Closing Bell, but don't go anywhere. Our special offering, Winning Mindset, the CEO guidebook, comes right up. Stay tuned for that.